The budget 2023. So after so many changes in taxes, they went up, they went down, they went around about, but those weren't actually a budget. So we actually finally had the budget. And the budget itself was actually really quiet. There was actually very little change on it. The one major change was on pensions. So in this video, I want to have a look at the pensions and of course to some extent on what was not in the budget. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please subscribe to the channel. If you press the like button, it helps me and the channel, so thank you for that. So let's first of all start by what's not in the budget. So what was not in the budget? The increase in dividend tax, which affects people who receive dividends from their limited companies, that was maintained. So the national insurance increases were quashed, but the increase in dividend tax was maintained, and the increases in corporation tax, which I have covered in other videos, they were also maintained. They're swingy increases because it's from 19 to 25% increase in the tax. So basically small and medium-sized companies are the only people who are suffering the increase in taxes as a result of all the profligacy over the recent events. Why do I say small and medium-sized companies? I'm sort of assuming that big companies mitigate it in one way or another, but definitely small and medium-sized companies, or me and my clients, in other words, being picked on as the only people who suffer from these increased taxes. There we go. I don't like it, but there we go. It is the law. So what are these changes in pensions? So there's two changes. So first of all, the amount you can put into your pension each year increases from £40,000 to £60,000, and the lifetime allowance is done away with. So let's put a little bit of flesh on that. Make sure that we're clear on one thing that could be confusing. When you put money into your pensions, you can look at this year, and if you had a pension scheme, you can look at the previous 3 years. So you've got 4 years in play at all times. So the £60,000 increase affects the tax year 23-24 and not the previous years. So when we go over on the 6th of April 2023 into the new tax year, we'll be able to put £60,000 in for that year, and the £40,000 for the previous years, 3 years, will be maintained. So they're not changed, it's just the ones going forward. So that's just to make sure that confusion, that possible confusion is sponged. So let's just think about this £40,000 to £60,000 that you put into your pension. I know that some clients it's really good for, and good luck to you if you save that amount. I'm pleased that you can put it into your pensions. But let's just remember that the average wage in this country is £33,000. So it's affecting people that can put more than the national average just into their pensions, let alone what they're using to live on. And now they can put nearly twice, what the national average wage is into their pensions. It's a pretty select group, I'll just put it out there, not many people. So that's the amount you can put into your pension. The other thing is the lifetime allowance. The lifetime allowance, which was set, was various limits depending on things that you'd done, but the main limit was £1,073,000. So that's been got rid of. And what is this lifetime? It's not the total that you can put into your pension, it's the total value of your pension, i.e. what is available to take out of your pension, with all the any gains and any income that you've saved into it. So why does it matter? It matters because there was a special tax if you went over the limit of 55% on when you took the money out. So that 55% tax has been done away with. But as I say, you need to have £1 million plus pension scheme in order for that to matter. So very few people are affected because not very many people have £1 million in their pension. But for those that do, it's really important, and I understand that. And good luck to you if you do, if you're saved hard. And people who have saved hard and made sacrifices sometimes do have that amount in their pensions. And I'm really pleased that you're not going to have this super tax, and you don't have the worry if you're sort of on 800,000 and you're worried about whether you should put money into your pension. It does take away that worry. I understand that. But who does it really affect? Why are they doing it? Why is this the one and most important thing that the government thinks they should change? Well, who does it affect? It affects, more than anybody, senior people who work for the government, senior civil servants and people who work for the government, because they get a pension based on their final salary, which is index linked, and those rights are very, very valuable. And very often, if you're senior, then they go over £1 million. So who are these people? Well, MPs, cabinet ministers, the people who write the legislation, senior civil servants in Whitehall. those definitely are affected, and they thought that the one thing that needed changing in this country was their pensions. Well, there we go. Says a lot though, doesn't it? The other people actually is doctors and dentists and other senior healthcare people, because they again have the advantage of the final salary pension scheme, and they're well paid. But of course it is the wrong answer to the wrong question. The question isn't why are we being taxed so much, which is what they seem to be answering. The question of course is, why are public sector pensions so much better than private sector pensions, and when the private sector is paying for those public sector pensions that they themselves cannot afford, and the equity of that. Of course that is the main thing. And that's completely missed them. They can't, of course they can't see that because it affects them. But there we go. I can't change the policies. I'm just saying them as they are. But for doctors, and I do have doctor clads, it will be really helpful because it was a major problem. They were being taxed all over the place because of the tightness of the pension rules that were imposed. Of course, they've made them tighter and they've made them easier. They're changing pensions all the time. So although I'm interested in what the pension rules are now, I'm also interested in the Labour Party response to this. At the moment their response has been a little bit confused, if we're going to be honest. They said, oh, we want to make the pension rules for doctors easier. And now they're saying, oh, it just affects the rich. Well, they need to pick a lane, because unless they want special rules just for doctors, they need to pick a lane. Do they want to get rid of these rules, or do they want to keep them? And I'll be really interested once the sort of the grown-ups have properly thought this through, which it's very difficult to do on the day. Once they've thought it through, I'll be very interested in what their policies are, because I'm thinking that my pensions might last 30 or maybe 40 years, because I'm expecting them to last my whole lifetime, and there is likely to be a change of government. And so I'm interested in what the policies will be of that changing government before I do too much. So I'll be watching out, and I'll keep you informed on what the Labour Party policies are if they get into government, which I'm sure they will over the next 40 years. So there we are. New rules for pensions and confirmed rules for company taxation. Who knows what how the fiscal policies will change over the next year. So I'll keep you up to date. So if you subscribe to the channel, I will keep you up to date. And if you press the like button, it helps me and my channel. And I hope I haven't been too political, but it just got to me a bit. Thank you.